Ladies and gentlemen, apparently mark your calendars for August 18th. That is the next round of litigation that AMC Entertainment is going to face. By then, we should be selling out with some sweet, sweet tendies if all things go according to plan, as I expect it will. Now, let's have a serious conversation here in this video. I'm going to talk about kind of what I expect to happen, my timeline, when I'm starting to think that we might get a ruling from the courts, and kind of how to go about this. Now, on top of that, obviously, we're going to go over everything that happened in the markets today, everything with AMC, everything you need to know. But I think most of us are just waiting right now. We're sitting around like just ducks, right? Ducks in a shitty shit pond waiting for something, right? Let's go ahead and get straight into this video. So first things first, this article says mark your calendars for August 18th. That is when Kevin Barnes is requesting that the Delaware Chancery Court takes this situation up, takes this litigation up. And the plaintiff ultimately requests 3 items from the court. The first is for the court to order AMC to hold an annual meeting by August 18th with a date of record as the time date as the complainant, which was filed on July 17th. The plaintiff's second request is for the court to require AMC to hold an election for its Class 3 directors and any other AMC board of director vacancies. Finally, the plaintiff's last request is for the court to grant him any other relief that is responsible and appropriate, such as lawyer fees. Now, is anything going to happen on this? Obviously not. This is all show. This is all bullshit, as you and I would likely say. Nothing's going to happen here. Don't mark your calendars for August 18th. Now, shareholder meeting, that could get interesting. Now, by then, that is 1 month from today, we should have a ruling from the courts. Now, guys, I don't know how what other kind of way I could put this. Besides, this court situation is going to cause a short squeeze. It's going to cause potentially the mother of all short squeezes. And it's very simple, right? You got a negative catalyst with a massive positive catalyst. It's like a 2-for-1, right? So once this bad catalyst is here, once the court makes her ruling, well, we've known about this for months. It's priced into AMC. You've seen the effects of that. You've seen AMC fall. Now you've seen AMC recover. But what you've seen at the same time is shorts taking on massive short positions. Really, they have no business being this short in AMC. Like for a 50 cents, right? Come on, this conversion, it's not even worth being short to the degree that they are currently short. It makes absolutely no sense. Well, it will make sense here in the next coming weeks. Possibly even by the end of this week. Maybe not. But if not, probably the next week. It seems like with this other litigation that's starting to go to court and have been filed, we should expect to get a ruling on the first litigation, this reverse split, the conversion, sooner rather than later. Courts don't like to take up multiple different, court hearings at the same time for ultimately close to the same thing. So we'll see what happens with that. We'll see the timeline. Now, short sellers are massively short, as I previously mentioned. But another aspect of this, which I don't think gets a lot of attention, which is really a lot of different aspects, but it's those cost to borrow fees and the length of time that you have seen here. So a lot of these short sellers, as we talked about literally 2 months ago, when we were expecting to get kind of a hands down just ruling, get this over with, and AMC to do the reverse split. A lot of these shorts got into these short positions with that narrative that, hey, this is only going to take a month and we're going to be able to get out. It's okay if we pay these cost to borrow fees for maybe a month. Well, that's not what has happened. And cost to borrow fees are stupidly high. So on one hand, you have that working against the shorts. The cost of borrow fees and the length of time that this has taken does not help the shorts. And maybe the courts are doing that for a reason. Maybe they understand this. wouldn't surprise me if that's, why they're delaying this so much. And at the same time they've been delaying this, short sellers have piled into these short positions. Currently, you have an estimated short interest of free float at 28.04%, 145 million shares that are currently sold short. Now, I talked about this a couple times before in different videos, but essentially, if retail still owns a vast majority of AMC's float, let me know down below in the comment section if you think we do still, then there could only be 100 to 150 million shares that are the free float, that are actually trading out there. Well, that would mean AMC short interest is anywhere from 100 to 200% compared to the free float that is out there. So the short interest could be a lot higher than what you're actually seeing right now at 28%, which still, take 28% for an example, that is extremely high. That is the highest short interest that you have seen on AMC stock throughout this entire saga so far. Now, cost to borrow fees. Cost to borrow numbers from Interactive Brokers, 975%. Cost to borrow average, 917.44%. Cost to borrow max, 1,040%. Cost to borrow minimum at about 51%. Cost to borrow minimum earlier in the day today and yesterday was over 900%. I don't really think I have to elaborate on this too much, but when you see cost to borrow fees spike like this, you typically see a rally in AMC stock. Now, another aspect that also does not get a lot of attention is the excessively high put to call ratio. The excessive buying of puts, I like to call them artificial shorts, that you have seen on AMC stock. It's no surprise AMC is $4.31 per share. It's had no love, literally no love, ever since this was announced in late December, early January. The put to call ratio has blown up, completely blown up, and we really haven't seen any relief. So based on this chart alone, you could say that hedge funds and institutions are 2 to 3 times more bearish now than they were when AMC went through an actual gamma squeeze, right? Small short squeeze, actual gamma squeeze in June, and the shares went up 10x. Why would you be 2 to 3 times more bearish today than that event? Doesn't make sense. Now, there's obviously a lot of manipulation, a lot of corruption, potentially naked shorting activity that is taking place, and maybe just the SEC and other people don't care. Right? That's always a possibility, as we put out in the last video. It looks like Highcroft Mining is now another target of illegal shorting activity, aka those naked shorts. AMC has been a target the whole time. It doesn't take a genius to figure this out. If we can figure this out, being retail investors making YouTube videos, you would think financial regulation in companies and agencies would also be able to figure this out, but apparently not. Now, AMC has some of the most bearish option activity that you will ever see in any stock in your lifetime in the markets. These are numbers that you would expect to see on stocks that are going bankrupt. And if we look at today, you had 62 orders from hedge funds and institutions worth $13.4 million with a positive order value of, you guessed it, 2%. That seems like the sweet spot. 98% bearish, 2% bullish. Just simply put, when everyone is this bearish, it doesn't go like that. Typically, if okay, for an example, right? Hopefully this will make a little bit more sense. If you were seeing this on the S&P 500, well, the S&P 500 would be like crashing, right? Like more, like you would never see this kind of negative ratio on the S&P unless like an asteroid was hitting or like aliens invaded and were trying to like kill the human race or something. Well, if this did ever happen, you're probably at a bottom, right? That's probably when the selling stops. Same story for AMC. No surprise that you have been slowly trending higher over the past couple of really weeks now. Obviously today, slightly negative in AMC, but not a big deal. Down about 1.37%. up 0.5% here in after hours. Not a huge deal at all. Now, for next week, it gets even more bearish as far as options are concerned. For this Friday, open interest on the call side is 36.25%. Open interest on the put side, 63.74%. Exceptionally bearish. But even next week is worse. Calls, 22% open interest. Puts, 78% open interest. These are just ridiculous numbers, right? And obviously, you guys know the $4 put, the $3.50 put, the $3 put, the $10 put. These are all some of your most active expirations. Now, I tend to lean towards maybe we get an announcement this week from the courts because of the extreme level of option activity that you're seeing for this week. For the $4 put, you have 203,000 contracts held in open interest. At the $3 put, you have 143,000 for open interest. At the $10 put, you have 175,000 for open interest. At the $3.50 put, you are seeing 65,000 for open interest. At the $4.50 put, you're seeing 33,000. $6 put, you're seeing 18,000. Like nothing even compares, right? Besides the $10 call, which has 206,000 for open interest. The $4.50 call is 39,000 for open interest, and the $4 call is 40,000 for open interest. Super negative, but still. This is the expiration with the most option activity. Next week, it's pennies. Drop in the bucket compared to what you're seeing for this week. So either you're going to get a lot more positioning and you're going to see a lot of hedge funds and institutions sell these puts, sell these positions, and go out and buy some new ones. That is always a possibility, and that's kind of what we've seen as of recently. But definitely be on the lookout for that. As far as options, it implies that we're going to get news on this here shortly, within the next day or two. So keep that in mind. Now, tomorrow, you're going to have Netflix earnings and after hours. And Netflix earnings, although it's not necessarily related to AMC, it could move around the whole entire sector. Entertainment sector, movie sector. It could have an effect. Now, Tesla earnings as well tomorrow and after hours. Las Vegas Sands, Discover, Kinder Morgan, Zions, IBM, and United. Watch different sectors here. I think there's certainly some trades to be had here. I personally have an earnings trade on Tesla, betting bullish. That trade is up over 100%, has still a max gain of over $20,000. Max loss now of about $800. It was a max loss of $400, but it's obviously went up like 100%, like I just said. If you guys want to come trade with me live in real time every time I make a trade, link down below in the description of this video. So, next big cause for concern for the markets is going to be earnings. Now, this week, your leisure, travel, hospitality, Netflix with entertainment, Tesla for auto, but credit as well is going to be big. American Express, Capital One, Discover. These names could give us big insights on how the consumer is doing. And the next following week will be even more important with Microsoft earnings, Google earnings, Amazon earnings, and a couple other bigger names. So be on the lookout for that. That's really the thing here that is going to cause the markets to crash unless the economic data just deteriorates out of nowhere, in which I expect that'll happen a little bit more towards the end of this year as some things like student loan repayments start to go back into effect. So you're kind of in a Goldilocks-like scenario right now if earnings come in better than expectations. But again, I'm not convinced that is ultimately going to happen. Now, what you've seen today as far as economic data is concerned, retail sales month over month came in at 0.2%. You were expecting 0.5%. So it was worse than expectations, 100% worse than expectations, but it wasn't negative. It wasn't too bad. You could have seen retail sales come in way negative, and that just did not happen. So could have been a lot worse was the story today, with retail sales still in positive territory, guys. So that's really what happened today as far as the broad index. The NASDAQ, S&P, and the Dow all did very well. Even the Russell 2000 up 1.27%, which again makes you scratch your head and say, hey, why is AMC stock doing so negative, relatively speaking, today? I mean, it was down 1.37%. Everything else ripped to the moon. And you're getting these allegations of illegal, naked shorting. Connect the dots there. Doesn't take a genius to figure that one out. Now, as far as AMC's kind of technical picture here, you're still riding that 8-day moving average. 50-day moving average coming down quite a bit, sitting at $4.70 per share. If you break out above that after this court ruling, then I expect you really rip to that upside. Now, the RSI is at 43.86, and the MACD is surprisingly in positive territory, at least here in the short term, trying to work its way up to a positive on the MACD. You're still negative as far as the overall MACD is concerned. Nonetheless, guys, that is going to do it for this video. That is everything that you need to know. As far as tomorrow, you're going to have building permits, but really nothing. The big story is going to be earnings for tomorrow and for really the next couple of weeks. Enjoy the rest of your day, and I will see you in the next one.